This is episode 50 with Brian Allen. Welcome to Spot On Insurance. My name is Ted Taveras. Join us each week as we speak to insurance professionals, attorneys, regulators, and compliance specialists on topics ranging from improving your agency to staying on the right side of the law. Subscribe and stay informed on the effects of new trends and disruptive emerging technologies on your businesses and your industry. Brian Allen brought 20 years of corporate management experience when he began his insurance career at Insurance Licensing Services of America in the accounting department. Within a year, he joined the management ranks of the company. Working in the accounting department introduced Brian to all of the services provided by ILSA. After several years in accounting, Brian joined the Surplus Lines Tax Department. One of Brian's first assignment was to oversee the implementation of ILSA SLIC portal, Surplus Lines Industry Connection. Brian is now supervising developers to introduce a new and expansive ILSA tax calculator, which will provide tax and stamping fee information as well as links to forms, state stamps, and filing regulations and instructions for ILSA's clients. Brian, welcome to Spot On.
Thank you, Ted. I'm very glad to be here.
5 years post NRRA. Are we anywhere near being standardized across the 50 states yet?
Absolutely not. We still have a long way to go.
So, Brian, where does the industry stand today? What's your assessment as you wrestle with surplus lines filings?
Well, we have seen upstart projects between many of the states to kind of coordinate and get some kind of a standardized process going. But as with anything dealing with the state governments, it just hasn't gotten there yet. There are so many hurdles and so many things that need to be brought into a uniform process that they haven't had the opportunity to do it yet. Basically, the entire concept of the NRRA was to get some kind of a uniform, consistent standard across the industry.
So what's holding back the standardization? What do you think is slowing the progress? What's slowing them down? What's keeping this from happening in your professional opinion?
Well, there are probably countless factors involved, but some of the primary factors are just the task of getting a state to implement changes. As most people who ever dealt with state governments know, nothing moves very fast when you're dealing with a state government. In order to actually standardize just within one state, you have to have meetings, voting, planning, and then if the changes are approved, then you actually have to go through the process of implementing those changes across any department or any officials that would be affected by those changes. So just that in and of itself is one of the major hurdles in any one state. And then you magnify that 50 times to cover and make those changes happen across the board throughout the country. That's just, at this point, seems to be insurmountable with the amount of progress that's been made.
Do you think there's a true desire for uniformity from the states, or are the states' internal concerns overriding that?
Well, depending on who you're asking in the department, I know the people that have to deal with the policy informations coming through their websites and actually handling all of the data that they receive, I know they would probably love some kind of a simplified, standardized process. But, the states do have considerations that they have to take into account. They are put in their positions for a reason, and one of the main reasons is to look out for the citizens in their state. And so a process or tax rate or forms that are required or the amount of premium tax collected in one state may work perfectly fine for them. But then you've got a state all the way across on the opposite coast that has different issues they have to deal with and address. And so those type of standardized processes may help one state and may hurt another state. For example, in Kentucky, you have municipality fees that they collect out of the premium. Basically, these fees will go to whatever municipality that they are intended for. And that money goes into a pool of money so that there's ever a disaster that hits that particular area, they have funds available to use to help the people of their state get back on their feet. And, not all the states have those concerns. Some of them can keep it a lot simpler, but those are the issues that you're going to deal with when trying to get all of the states to agree on one standardized process.
So in reality, since each state is so different and each one may be wrestling with a different problem, creating uniformity becomes more daunting.
Absolutely.
Tell me about the technological strides that you're seeing from the states. Have they managed to adequately keep up with technology, or are there still some that are lagging behind?
Yeah, and that is another issue. Many of the state, even federal governments, depending on the department you're looking at, they run on antiquated systems. It takes a lot of money to update a system that covers and captures everything that they have to keep up with across all of their government agencies. And so, even implementing a change in something like that is kind of a daunting task. But most of the states have gone more electronic. They are requiring less and less actual paper documents. You have a lot of states that have straight online filing where you don't need any kind of forms or signatures or anything. You can just log on to their website or to a kind of hub portal for multiple
Hmm.
states. You can process everything straight online. All you have to do is select from drop down menus and enter the data into data fields, and all that information goes in and it's processed that route. Then, all the way on the other end of the spectrum, you still have some states that require a lot of reports and payments and things to be mailed in, actually printed on a form with a wet signature attached with
Wow.
a check. You do have some that are kind of a hybrid between the two. Most of the filing side can be done electronically, but when it comes to payments, they still want a paper check to be mailed in, or they still need a wet signature on one form that you can either mail or upload to their website. So it is moving more and more to a streamlined electronic data entry process than the old paper route, which does make sense, but there are still some holdouts.
So, do you think that will help with the uniformity that the government is looking for at this point?
I absolutely think it will. At some point, they should be able to basically set up a federal or national database where all of this information from all 50 states, as long as it's in electronic format, could be migrated into a national database that could be used to standardize processes.
Hold on, but I thought that a national database already existed.
There are some national databases. In my experience, they do not capture everything from all 50 states. They kind of make an attempt to do that, but there is not a full spectrum database that captures all of the same information about every policy from every underwriter, from every broker across the country. And that's really what they need to get to.
Brian, actually, I was referring to the PDB. Doesn't it already capture all this information?
From what I understand, the PDB, that'll pretty much tell them like where they're licensed and whatnot, but it doesn't, as far as the actual filing process, it doesn't, capture policy numbers and how much stamping fees a broker would owe for any particular year. And that's kind of what we're hoping for, is basically if they could come up with a national database that does require the brokers to enter in the same standardized data. Like, every state uses the same form and they all need the policy number, the effective dates, all of the individual data that you have to submit to each state website depending on what they look for. Some states require you to submit the declaration page when you submit the filing. Others
Hmm.
don't even want that information. They just have you enter the information in. They don't ever see the declaration pages. So while there are national databases that do give certain information about every license or every broker in every state, they do not capture all of the information regarding all of the policy filings and any taxes owed or stamping fees owed. And part of that is because each state does work differently. Some states don't even have a stamping office, so they don't collect a stamping fee. Some of them collect transaction fees for their different portals. And some of them base their premium tax calculations on whether there's a policy fee or not. I mean, there are just so many variables in so many states that's almost impossible to compile right now.
Could that be one of the reasons why agents and brokers suffer from so many penalties and fines?
Absolutely. And even when you think you understand the process, there are kind of triggers in the process that will change the entire process for you. Basically, let me simplify. Like in Texas, Texas does not require you to report on a monthly basis like a lot of the states do until you hit a certain threshold. So if at anywhere during the year, let's say we're in February right now, if I end up by next month, suddenly I have sold enough in policies to accumulate a $70,000 where you owe $70,000 in taxes. As soon as you hit that $70,000 threshold, you immediately have to start reporting monthly, and you have to complete through the end of the year reporting monthly. And if you fail to do so, that can result in penalties or sanctions against your license. And there are just so many pitfalls that if you are not thorough and have a really true, meaningful understanding of how these regulations work in these states, suddenly, you find yourself in a pit and the fines and penalties are adding up. Some of these are very easy to accumulate. In California, if you submit a tax report one day late or even 1 hour past the due date, the deadline, that's going to be 10% of the taxes owed
Whoa.
penalties immediately. So 1 hour late could cause you, $10 million in penalties.
Oh, 10 million.
Could be. if you're
How do I
doing
get
that
in there?
well, they're going to take that much.
1 hour late? What?
Yes. So
That's kind of scary. Tell me something. Do you think there are as many penalties, or what were you calling them, pits before,
yeah.
as there are states? Because there's like 50 of them. So at any time, each one of them has at least one, if not two, of those pits that you can fall
Oh,
into.
absolutely. I mean, it runs a spectrum. I know there's one state in particular, I can't remember right off the top of my head, but they have a regulation that says that all of the taxes owed have to be paid through electronic funds transfer online. And if you accidentally forget that for that state and mail in a check, they charge you a penalty for that. I believe in that state, it might even be up to 25% of the taxes owed and penalty for accidentally paying them the wrong way. So even when you think you're doing the right thing, it could result in penalties. And I understand the states do have things to consider on their side. The manpower they have to process all this information coming through, but that doesn't always translate to a good thing on the broker side when you're trying to stay compliant.
Spot On is sponsored by Insurance Licensing Services of America. Need help with corporate name changes, annual returns, or surplus lines tax filings? Feeling overwhelmed? Well, if you're looking for experts in regulatory compliance, you've come to the right place. ILSA provides the industry with over 50 services. To learn more about the company and how they can help, visit ilsainc.com.
Tell me one or two stories about what you face on a regular basis when you're handling surplus lines tax filings. What are some of the problems that you see now, and were you seeing these problems a year ago? Have things improved? Has it gotten better since you started?
I believe it's gotten better. Part of that is more and more states have moved to these type of filing hubs or whatever. You have the opt-ins website, you have the SLIP portals, SLIP. You have those portals. More and more states. Matter of fact, we just found out that Alaska is now moved to opt-ins. Actually, it was last quarter of 2017 that first came available online. So because of the advances in technology and having better capabilities to link either through back doors, they call them back doors, into the websites, you can link in there and do bulk uploads and things like that. So they are bringing the better systems online with a lot of the states. So that does make it a lot better. It makes it a lot easier to keep track of. That's for sure. There's nothing more time consuming in this area than having to track things through either the regular mail or through FedEx or UPS or something like that. So as we move more away from kind of the antiquated processes and systems, it really is improving our capability of processing more filings, especially with less errors. That's the big thing. It's not only important to get everything in on time and make your payments on time, but it has to be exactly right, because those can also result in penalties as well. There are a few other areas. I know I heard a story from a client in particular that there was one state that they had a few years back had missed filing, I think it was 3 policies with that state. And this particular state, they will charge a $25 a day penalty for a late filing. That's per filing. And they had missed 3 filings. Matter of fact, by the end of the year, when they did their annual report, they have to list everything that they sold for that year in that state. And those 3 filings that were missed previously during the year were on that annual report. However, since they did not meet the deadline in filing those online through their specified process earlier in the year,
Mm-hmm.
those policies racked $25 a day penalties, not for just the end of that year. You would think they would have cut it off when they received that information at the end of the year, but they continued to assess penalties every day until almost the very end of the next year. So it went almost 2 years. The state never notified the client that they were accruing penalties, that these were ever even missed, because when they turned in that annual report, they thought they were done. They had double checked, made sure that they had reported everything sold for the year. And then almost a year after that, they received a letter from the state saying, hey, you owe $60,000 in penalties. And so, like I said, that kind of goes back to what I was talking about earlier. Even though you may understand the processes, you still have to be so thorough on your records on your side to make sure that you have accounted for everything, that nothing fell through the cracks, because sometimes the states don't have a mandate upon themselves that they have to notify you that you're being penalized on a daily basis. So, you just have to be extremely careful. You have to have, because of all of the different hodgepodge of systems out there, you have to make sure that your own internal system is thorough enough to capture all of the information that you have to track so that you don't fall into those kind of pitfalls.
Do you see a huge difference between the processes or the systems that you're able to work with at ILSA and maybe a large company has, as opposed to the systems that are available for the smaller agencies or agents that are trying to process their surplus lines?
The smaller, what are sometimes referred to as mom and pop shops, or the small businesses, they don't have the resources that other corporations and larger companies may have. That's going to be a huge factor. Here at ILSA, we have a large team of people who work together and help each other process all of these filings. The flow of tax reporting and tax filing is very seasonal. Throughout the middle part of the year, it kind of slows down. When you start approaching the end of the year, rolling over to the first part of the next year through April 15th, when all these taxes and reports are coming due, you have so many reports that are compounding on each other. You may have some states that require monthly reporting, but that's not most of them. Most of them don't require any kind of reporting until maybe the end of the year. But I can promise you, at the end of the year, every single state is going to want some kind of a report. And so, because of the ebb and flow of the processes and of the due dates when everything comes due, it can be very, very overwhelming at certain times of the year. And so we have an entire team of people and excellent systems to depend on. We have guides that are constantly updated. We have other departments here that come in to help us when we run into these busy times, and we need to find ways to speed the processes up so that we can keep up with the due dates and keep our clients compliant. We have a lot of those resources that allow us to do that, so that we don't really have to sweat it. But if you're a mom and pop shop, if you're a very small business that's just started up and you don't have those kind of resources, it can very quickly become something that goes completely out of control. And even though you know everything that needs to be done to get back into compliance, you just don't have the people or the time to do it.
Well, it seems to me that it takes you away from your core business.
Absolutely, and that's one of the big benefits here, is that we're able to, once they bind and sell a policy, they just send it into ILSA, and we take it from there, and we just send them a confirmation when everything's taken care of and submitted completely for them, and then they can focus on generating revenue for their company so that they can send us more of those filings.
Brian, I want to explore zero reporting. You hear about this all the time. What is it? How do I avoid getting in trouble because of it?
Well, basically, at ILSA, we kind of break the reports into 2 different categories. You have a business report and you have a zero report. Basically, a business report, that's what most people are familiar with. And it's pretty self-explanatory. Whenever you write business, you sell a policy in a state, that state needs to be aware of the details of that policy. And so you file the policy information with the state. Then at the end of whatever reporting period you're talking about, they will require a report. So when you submit that report, it lists out all of the business you did during that reporting period to that state. When it comes to zero reports, and this is something that does catch a lot of our clients. They aren't aware of this when they first get into surplus lines, or they don't keep up with which states require it. But some states, if you hold a license in that state for surplus lines, you have to send a report in at the end of the reporting period. It doesn't matter if you didn't sell a single policy during that reporting period, they still want you to report to them that you didn't sell any business. So basically, we refer to those as zero reports. So if you're licensed in a state and you're not selling any business there, it's easy for you to assume that you don't have to submit anything to the state because there was nothing to submit. Well, that is not true in every state. Many states require a zero report. Basically, it's an affidavit or a form or some kind of electronic process where you go to the state and you just let them know, hey, by the way, we didn't do any business during this time period, during this year or this month or whatever the case may be. And you just report that to the state. And if you fail to do that, that can absolutely result in penalties. And, of course, the worst thing would be actual loss of your license and the inability to write any more business in that state. And that's one of the things that we explain to our clients that they need to consider too. If they're considering whether or not to hold a license in that state, we just kind of advise them, you might want to look out for those states that do require zero reports, because if you're just going to procure a surplus lines license just to have it, sometimes that may not be a very smart thing to do, especially, some of these reports can be very costly if you do miss one. So
Are zero reports going away in some of the states?
yes.
Are all the states doing them at this point?
No, not all of them do. Matter of fact, there have been a few lately that have dropped that requirement to send in zero reports. But then again, I think there were two other states that started requiring them, and we kind of see that. And typically, I would say in my experience, since I've been with ILSA, it's kind of been a wash. When of course all of this translates to our daily business. And so, you have one state that used to require all these reports. Now they don't require the zero reports anymore. So we kind of look at that as a lost revenue stream for us. Whereas you flip over to another state and now they do require zero reports when they used to not require them. So I would say overall, on average, it's probably been a wash. And I couldn't tell you exactly why each state decides to start requiring or drop the requirement for zero reporting. But referring back to what I was discussing earlier, that's something they work out internally in the states, and they just send out a bulletin and notify the insurance world about the change. Those are some of the items we have to keep track of. But I would say overall, it's been a wash.
Well, you answered my next question, which was, what in the world would possess a state to start requiring zero reports? It seems that if you didn't do any business in that state, hey, you didn't do any business. There's nothing to report, right?
Hey, well, you would think that, but then again, state governments do depend a lot on fees and taxes in order to collect revenues that are needed in their state. Maybe we've seen a lot. We just kind of came out of hurricane season recently, and so we see the effects that certain states can suddenly find themselves in. They have a natural disaster or something like that, and then suddenly, maybe it's the worst they've had in 50 years. And so now, because of whatever may be going on today, they have needs that they didn't have before, and don't have the funds to cover those needs to help the citizens in their state. So there are probably countless reasons that states would revisit their regulations and requirements. So yeah, it's just kind of a case by case basis. They try to do what they feel is right for their constituents on their end, and the insurance industry tries to deal with those changes and kind of tries to work with the state to find a good common middle ground to meet in, and that way it can be a win-win for either one. But ultimately, you are required to do whatever the state government requires. So you have to stay compliant with them.
Well, it's not the same, but it does make me think of speed traps. You're going down the highway, and there didn't used to be a trap here before, but now there is, because they need revenues in this place. They've lost revenues some other way, so they're trying to make it up.
That's right.
They're
like, man, nobody goes 70 miles an hour anymore. We're going to have to drop the speed limit to 50,
Well, I know I've experienced in Texas where you're going like 80 and all of it. I love that speed
sure.
limit, but all of a sudden when there's a speed trap, it goes down to 65. Yeah. It's really difficult to slow it down that much, or to 60. And there's no reason. The highway hasn't changed.
Absolutely. And they know right where to position themselves to catch you. Maximize their returns.
Our guest today has been Brian Allen, supervisor for the tax filing department at ILSA. Brian, thank you so much for joining us here on Spot on Insurance and taking time to share your knowledge with the industry.
Yes, sir. I very much appreciate you having me on. It was definitely fun. I look forward to maybe visiting with you again in the future.
All right. Thank you. Visit spotoninsurance.com, where you discover an ever-growing library of podcasts, videos, articles, and online tools by professionals for professionals to enhance your insurance education. By the way, that's where you'll also find our podcast notes and bonus resources. Please don't forget to click the iTunes link to rate and review, and let others know what you think of Spot on Insurance. Thank you for joining us, and we'll catch you next week.